Welcome back to the Broto Art Climate Science Conference on Affinity. My name is Ian Edwards and I host this event. Why, oh why, are we having a finance panel on an art and science program? It's simple. For any art science innovation to roll out at scale, say a global fix for climate, we need partners in the halls of power. That's finance, business, and government. I, for one, think that modern finance is a boogeyman for our fight for a sustainable environment. It's wealth creation by extraction of our natural world. We need new ideas, and it's helpful for our art-sci innovators to know what's what in the world of finance. And importantly, to know that there are finance thinkers, immensely creative finance thinkers, making a difference for climate. We're lucky to have them here for an outside-the-box Broto art-sci talk, and ways that art-science collaborations can make a real difference, even in a sector as forbidding as finance. So, Bank of Nature. Why don't we have a banking relationship with nature? Isn't an extractive society glaringly in debt to nature when we see resource depletion and biodiversity loss? Ask us questions. Bring your art-sci challenges to the concepts.
This is the panel on the Bank of Nature in our discussion of affinity for art science thinkers. And before we get into the conversation, we've got two of the leading voices in finance, actually, for changing how financial decisions are affecting what we're trying to define as the human nature partnership in Raj and Ellen. But to get things started, I just wanted to kind of talk to the community a little bit about why finance. And we're talking about places where you can intervene into a system in order to change what's happening from that system, how we are creating the world in which we're living. And I just was reflecting on that with another conversation just this week. And there are really kind of maybe 5 different systems we need to be thinking about, not just one. There's all of our own individual hopes and fears and what we all want to get out of life. There's sort of the cultural norms and narratives, the big stories that bind us together. There's politics and government, which is kind of the default, at least in the US, for a lot of people on how we're going to change our world. Then, of course, there's enterprise and commerce and business. And the last one that we get to is money and finance, which is what we're going to ask you to focus on with us a little bit today. Another interesting thing, this conversation is so current, it's confirmed to me almost daily. In my LinkedIn email box today, someone had posted this map of finance that they had constructed as a map of the financial system, very complicated model. And I was looking at it and I was thinking about our conversation and thinking, well, where would we fit a Bank of Nature into this map of finance? And it leaves me scratching my head. I think it's really difficult to do. And a couple of points, again, to just orient us, I think a lot of people in our audience may think finance is all about transaction processing and moving money around the world. And they're saying, well, that's all experts, and what do we as art science thinkers have to contribute to that? And I would say probably very little. But there's another very important part of finance that we want you to contribute to, which is finance as a social structure for making decisions about how we build our world today. And what we want to do is invite Raj and Ellen to help us understand some of the really creative edge thinking that's going on about how we can engage with the financial system as it is currently configured to try and get it to make decisions that are more amenable to a sustainable human nature partnership. And then if we don't run out of time, I'm going to throw out the possibility that maybe we should be really thinking about upgrading the system entirely to get to a better place. And so, Raj, I know you've got some slides that you prepared for today that maybe you could just sort of use to kind of get things started and frame things for our audience.
Thank you, Tim, for the very kind words. And yeah, the conversation is very essential. If we look at slide 1, the the system diagnosis of the problem is a great place to start. Einstein didn't say he would spend the first 55 minutes of looking at a problem before he spent the last 1 minute or 5 minutes of the solution, but it's kind of true as well. And, you know, what we're aware of is the symptom at the top, which is the greenwash, you know, the ESG fund that holds a lot of oil and gas stocks. But underlying that, there's a bigger level problem, which is endemic to the sector, which one of my colleagues, Duncan Austin, calls greenwish, which is a wishful hoping that there is a win-win solution out there of doing good and making money. And that connects to a groupthink. There's a cultural pale male and stale monoculture amongst investment decision makers. And then if you go one level layer, you have a set of theories and activities. You know, people talk about chasing alpha and now chasing ESG alpha. There's the short-termism, which has been talked about for many decades. There's the incentives. And then underpinning that is the really powerful theory stuff, you know, the shareholder value primacy, CAPM, GDP as a metric, but also sort of willful blindness, the idea that we're ethically and politically neutral. I heard some investment managers saying this at the very time that it shows that investment managers, senior executives were funding the Republicans much more than the Democrats. So this neutrality idea is quite false. And then underpinning that, we're starting to get to some really tricky issues, like the fact that carbon has no price, meaningful price yet, that regulators are captured, that even judges are captured. And underpinning that, if that wasn't hard enough, you know, we've got the fact that there is no consciousness really in the corporate world today about planetary boundaries. We operate as if we're, you know, infinite growth is possible. We have no idea of intergenerational equity. You talked about a bank of nature. Well, currently we have kind of, frankly, ecocidal and genocidal policies underway. And then underpinning that, which may be the focus where art and science may finally have most sway, is unconscious kind of blindness of where we're at. So if I were to say what's needed, if we go to our second slide, it's a multi-pronged approach. And currently what's on offer as impact investing or ESG investing or green investing really doesn't match this. First, we need to be paying much more attention to the S of ESG, the social, you know, things like inequality, tax avoidance, human rights. And the second is we need to have a real world view of governance. At the moment, it's a very shareholder value primacy view of governance. So things like whistleblowing and diversity at boardrooms needs to be high on the agenda. We need a much more meaningful engagement of staff. Interestingly, going back to the thing about political donations, the majority of staff at investors, and you know, let's face it, people aren't drawn to investment because they're, you know, radicals or social, you know, green activists. The majority of their money went to Democrats, but yet the majority of the money from the executives went to Republicans. And so meaningfully engaging staff and beneficiaries and civil society is a really important point. Stewardship, what we call engagement, needs to be fit for purpose. People need to act as owners and be as tough as owners can be. At the moment, I describe engagement that happens as tummy tickling. It's a nice, it's a nice distraction activity. Public policy engagement is absolutely critical. I know you're in the States, and you know, we've had the Chamber of Commerce and the Business Roundtable welcome at least acknowledge the fact that there has been a winner in the election. Sadly, a lot of the powerful trade groups, including the International Corporate Governance Network, as of today, our recording, still haven't acknowledged that, and many of the even more powerful trade financial groups haven't. Courage is a really absent factor amongst the leaders of these very large organizations. You know, some of these organizations have assets under management which are equivalent to GDPs of G7 countries, but they act as if they're impotent. And lastly, there's the internal governance. None of what's needed will happen in a culture which is, to be frank, crony capitalism captured by buddies in boardrooms. So that's my challenge to us, really. How do we switch from the very incremental cherry on the cake, the rearranging of the deck chairs on the Titanic, to what's needed in a time frame that's needed? And at this point, I think I should hand over to Ellen, who has many of the answers.
Oh dear. As much as I'm not sure that's true, I mean, sadly, for the purposes of an exciting panel, I agree with everything that Raj said, but of course, I usually do. Really critical points. And I think one thing that is worth saying to this crowd of, especially people who have a broader viewpoint than is usually the case in investment in the investment realm, is I mean, I think we should make sure that we are warning you of the common pitfalls, because you actually do have a role in terms of especially shaping social discourse and calling out BS where you see it. So, for example, beware any promise that confines itself to disclosure or reporting or a new policy only. Those are all means, not ends. I don't know why it's so common to have the outcomes of engagements, the resolutions be something that is in fact not an outcome itself. It is just prevalent. So that's just, beware that. Don't accept that as an outcome from your fund managers, from your banks, whatever. Speaking of banks, it's all about banks. If you look at what's wrong with environmental, social, and governance investing these days, it's, I mean, there are a lot of things wrong with it, let's be clear, and for many of the reasons that Raj pointed out. But one of the major problems with it is that it focuses on, and I'm just going to get really nerdy here for a moment.
Please.
Stick with me. It's because it tends to focus on public equity, and that means like the big name companies that that are listed on the stock market. So, Google and Walmart and Exxon are all great examples of companies. They're not great examples, but they're examples of companies that are listed on the stock market. And what's important there is that we need to very neatly describe to ourselves what the difference we're trying to make is with particular actions. Because if you sell a share in Exxon, you are selling that share not back to Exxon, but to another shareholder. Which means that you are exchanging the money in the share with another shareholder. The money's not going back to Exxon. It doesn't help or hurt Exxon, depending on what share you own, particularly, unless you announce it and you've got a big name. You're part of an institution that's culturally respected. Because then the effect is that you've added to this public discussion. You have to announce it. If you don't announce it, it is a tree falling in the forest and no one will hear it. But so we have to be careful about, are we trying to have a social discourse impact in a particular case, or are we trying to actually move money? I'm about both. So I think that there is value in divestment or equivalent because of that shift in social discourse. I mean, the legal scholars will tell you that we don't tend to legislate things unless they are viewed as morally wrong by the population, which is why divestment is aiming at shaming companies so that it makes it more possible for politicians to do the right thing and regulate those companies. So that's one theory of change. But if you're going to actually shift capital, you can't mess around with selling shares on the stock market. So where does new capital come from? Well, it's all about debt. So the most recent numbers I've seen suggest that about 64% of new capital for fossil fuels comes from bank lending, and another 26% comes from bonds. So that's like lending to companies. So if Exxon were to sell you a bond, you would be sending money to them. You'd be lending them money basically by buying that bond. So that's also sometimes called fixed income. And so any attempt to look at or to change the flow of new capital into fossil fuel companies, for example, has to look at debt, because you'll have noticed those two numbers add up to 90%. And interestingly for you, as you know, again, broader thinkers in this area, is that actually narrows your focus to a few large targets, which is always good. So if you look at where the banks that are lending come from, so they are probably the top 2 or 3 dozen major global banks, a huge number of which are in the US and from Canada, where I'm from. So those are the largest funders of fossil fuels. There's a report I'm sure we can circulate later that goes over the relative power of those banks, but it's a small number and you recognize their names. You probably bank with them. And they are vulnerable because they have recognizable names, and they are disproportionately responsible for not just direct lending to fossil fuels, but they actually underwrite the bonds as well. So they help companies bring those bonds to the market in the first place. So basically, if you target those 2 or 3 dozen banking institutions, a ton of which are in the US, suddenly you are able to affect 90% of new capital for fossil fuels. That is really quite remarkable and rare to have such clear, impactful targets. So anyway, that I just want to really put debt into the center of our conversation, but I'd be really curious to hear your thoughts on that, Raj.
Yeah, I'm sorry. I'm sorry, Ian. I tend to agree with everything that Helena said. We'll have to find something to disagree on, but maybe just to add 2 points to Ellen, what you said. I mean, we've got a really topical case coming up these weeks and months with the Aramco bond,
Yes.
which is a bond for a very large oil and gas company, Aramco, Saudi Aramco, which is very closely associated with the Saudi government, and many independent scientists and others have spoken for years about the government's lack of support for climate change. And yet many of the investors will be buying up this bond, as you talked about. And I think that's a really major part of the greenwash that we can see. The second, Ellen, and I totally agree with you about the banks, is there are a very few number of investors who have a very big impact on the market. And these are called index funds or passive investors, because they track an index. They're the BlackRocks and the Vanguards and the State Streets and smaller versions like Legal & General. Academics have written about how these 3 players basically own corporate America and corporate Britain and many other countries. If they were to really take on board biodiversity and systemic crises, we would have a different world, because they would create the career incentives and other incentives that corporate executives need. At the moment, what they're trying to do is look for the data to beat their competitors. So to be blunt, they're looking for data to make money out of climate change or sell funds. And, you know, someone, I think you called that BS. Someone needs to call that out, and who better than artists and scientists who in their different way have an authenticity and hopefully less conflicts of interest than the financial sector.
Tim, I just wanted to weigh in a little bit on what I've heard so far. You know, I'm not a finance person or an artist or a scientist, but I'm here as a sort of a proxy for our audience, most of whom identify as artists and probably have no idea what finance is really about. So I wanted to say thank you to Ellen and Raj and Tim for explaining some of the finer points of this. We described finance as a black box, and for people who are not familiar with finance and all the intricacies that go into making it happen, it seems like a bridge too far for a lot of people who are just trying to make sense of their day-to-day lives or of their art or their science. And where I've heard that our community can get involved with some of the things that Ellen and Raj are doing is in this idea of a cultural awareness, in that there are a lot of things that go on behind the scenes in finance that have no bearing on our goal of a climate remedy. But maybe what art and science can do is, showcase what might be able to be done. And that's why I'm excited to have this panel in particular with our affinity program, because what we don't have is a very clear understanding of what our relationship to nature is. And if we don't, and we can accept the fact that we don't, how do we fix that? And I think that what Ellen and Raj are doing, I mean, Ellen, you're leading the way on Cambridge University's divestment program, right? Can you tell us a little bit about that?
It might be a bit of an exaggeration to say I'm leading the way, but there's a working on it, and I've been kind of providing the academic underpinnings for it. If you're interested in reading the report, it's actually meant to be sort of a guide for campaigners, honestly. So it has all of the information that you would need to get things done within your pension fund or university or whatever. But I think, if you look at institutions that have a kind of social purpose, like a university, like Cambridge, or like a pension fund that's meant to support workers into their old age, I think that it's really worth zooming in on something that Raj said and kind of drawing out the implications, because I think it's the opposite of what most people would want or what they would assume is happening. So Raj says that that what ESG investors, so environmental, social, and governance, or responsible investors, are doing is basically trying to make money off of the climate crisis, and they're doing that by trying to stock pick out of climate risk and overweight themselves in companies that they think will grow in the context of a too slowly decarbonizing world. So I think most of us would find that kind of objectionable, in that, surely what we would want to do is actually reduce those risks in the real world, right? And I think that that's what people quite rightly assume that they're getting when they invest in an ethical fund or a responsible investment fund. I actually think it's actively and unethically misleading people to put labels like that on these products, because they're just selfishly trying to make you more money. They're not actually trying to address these issues in the real world, which is enormously problematic. But one frame that I and others use to think about this in a different way and flip things around is, okay, if your goal is to last for a very long time as a pension fund, and you have basically a slice of the economy in your portfolio, it's what Raj was saying about index funds. Basically, you just own a little tiny bit of everything. You can't stock.
Not, Ellen, not so tiny. These organizations own 3, 7, 9%. So these are, but totally agree with you.
Yeah, no, very good point. So a pension fund I might have been talking about would maybe fit into the tiny category, but you are so right. These top 3 index providers that Raj was talking about, by the way, all domiciled in the States. So something for you to focus on particularly. I mean, they own, probably double-digit amounts of the average listed company, the 3 of them combined. And the fact that they're doing nothing is actually often the difference between a shareholder vote passing or not. Not that shareholder votes are enough, but anyway. So if you own a slice of the economy, if you just think about it logically, you can't stock pick your way out of climate risk, especially not over a long time frame, right? You can't get it right. No one could, and it's going to affect pretty much everything. So the idea that you would just try to stock pick your way selfishly out of climate change just manifestly looks like a short-term money-making proposition, not a way of having an actual impact on the real world. And if you ask, why are socially responsible, so-called socially responsible or ethical funds focusing so much on public equity? It's for that reason. That's how you make money, is by stock picking really effectively. But if you actually want to have an effect, I mean, that's why they're not looking at debt. That's how you can tell if someone is actually trying to have an impact on the real world. Because if you, so when I talk about institutions that own a representative slice of the economy, more or less, we refer to that as universal owners. And I hope that, especially by the end of this conversation, you consider yourselves universal owners, because I think it's a much broader category than we might mostly think of, because I don't think any of us can really stock pick our way out of climate change. So if you're a universal owner, the way that you can behave is to take advantage of your ownership in listed companies, to vote against the re-election of board of directors and their remuneration policies for executives and all these other things that, by the way, are not usually the tools used by so-called responsible investors. They tend to use things like advisory shareholder resolutions or other similarly relatively ineffectual means to use their power. But you also just need to be focusing on debt. So that is your indicator as to whether your pension fund or your university endowment is actually paying attention to impact on the real world, as opposed to your portfolio.
What I just heard you say, Ellen, that I think is a nice segue into our particular audience here, is you can't stock pick your way out of climate change. And I think for me, that raises sort of two questions as a follow-on. One is, what can you do? And that's a point where I think we need to be engaging with art thinkers and science thinkers and helping create a new narrative of what we can be doing. And right along with that is, does everybody agree with you that you can't stock pick your way out of climate change? And if they don't, how can we share that narrative and get people to look at that and say, all right, what we're trying to do is stock pick our way and it isn't going to work. That's a huge problem with the conversation about a bank of nature, Ian, that people have to come to grips with what isn't going to work. And I hear Raj constantly beating the drum that a lot of what we're doing is talking like we're trying to address the problem, but not actually addressing the problem.
Exactly. I mean, Raj talks a lot about forceful stewardship, which is what you should be doing within your public equity holdings if you're actually serious about this stuff. But what you're talking about with this Bank of Nature idea, Tim, is that, I mean, we need to start thinking about nature as a commons that we can contribute to through our investments, as opposed to this idea that we can protect ourselves narrowly from broad systemic crises. So, I mean, not being able to stock pick your way out of climate change. I mean, I would love to see the attempt at a portfolio in 2050 that is unaffected by climate change. I just can't picture it. And also, the building that in which people work could be inundated by rising sea levels and so on and so forth. Like that,
right.
We're already seeing these effects. No portfolio now, other than maybe a highly concentrated, green technology fund, would be unaffected by climate change now, by through massive fires or air quality issues that affect people's health. Like, these are costs that layer that we don't pay attention to, but they're already happening.
And that's an interesting point too, because if you're talking about what does it mean to stock pick your way out of climate change, I think we've drifted off into an area where you and I and Raj know what we're talking about, but maybe Ian and his community doesn't really understand. But what if we started to say, well, what you're trying to do is build a portfolio of investment in companies, none of which burn fossil fuels?
If you just had that strategy within public equity, I think is what I'm trying to say. Like, it just doesn't matter what you own in public equity, unless there is a symbolic purpose for publicly making a statement that you're stigmatizing a certain sector. But
so maybe if I just add in there, if you don't own fossil fuel companies, that's a good thing in one sense, but you are going to own and maybe you might be made to be overweight in other companies that are almost as bad for the environment as the fossil fuel companies. So the heavy users of fossil fuels, the energy utility companies who have done very damaging lobbying against the clean energy bill, for example, in the States, you'd probably be overweight in those. And if you're not overweight in those, you'll probably be overweight in other sectors which have a key enabling role. So, for example, insurance companies could be doing an awful lot to help real estate owners and the public adapt to and prepare for the coming climate severe weather events, but they're not, because they know they can, one, increase their premiums every year, and at the point that they can't get away with that, they'll just withdraw cover, particularly for people who don't matter. So basically the majority of people. So creating portfolios that are pure, I think is I don't want to be rude, but it's a delusional strategy in a world which is unraveling fast. We may feel good about our portfolios in the way that we can, go to church and feel good about our money, or have therapy and feel good about ourselves. But in a society which is unraveling, a portfolio that's clean doesn't make sense.
What does make sense?
But if you stick just to the fossil issue, the climate issue, and we connect the dot from climate to burning fossil fuels, gas and oil, and the stuff we all use every day, and we acknowledge that it's so pervasive throughout our economy that we can't stock pick our way to a different thing, then don't we have to ask ourselves, what can we do?
Absolutely. And I think one of the things that we can do, and this is about worldviews and mental models, right. there is no proof, because the future hasn't happened yet, right? So one thing that we can do is to require all companies to publish and then execute transition plans which are consistent with the Paris Plus agreement, with keeping warming well below 2 degrees. Now that's valid whether you're a Google or a Walmart, or whether you're public or privately owned. It's valid whichever sector you're owned. And it's also valid, I would say, whether you're an oil and gas company or a wind energy company, because there will be 1 or 2 oil and gas companies that manage to make the transition. Most won't, or they'll take down the world and all of us with them. But there will be some that continue producing oil and gas for the foreseeable future. And so our challenge should be a waterfront challenge to all our stocks to make that transition and make it quickly. We're not doing that, as you know, Tim. And
but now BP, though, BP has announced that they're going to do what you just described, which is turn themselves into a renewable energy company, right? They're going to get out of the fossil fuels business. So, that's an interesting thing to keep an eye on. I'm frankly skeptical that they can do it, because they're still owned in the public markets. They still have to drive their share price up. And how are they going to drive growth while they're transitioning their core technology?
I think it's absolutely right to be skeptical. We've seen Beyond Petroleum once before, right? But it's not only BP, Shell are saying it. I think there are 2 things to say there, and Ellen, please chip in. One is there's a big difference at the moment between the European oil and gas companies and the North American oil and gas companies, sadly Canadian included, which is at least the Europeans are not trying to actively undermine the politics. And that's a big difference. And the second is you are actually seeing early signs that companies that become cash cows, to be blunt, that stop investing in new exploration, their share price is going up as they hand that money back to investors like the University of Cambridge and much bigger players. So I think there is some hope that the market might actually incentivize this degrowth that's needed in the oil and gas sector. But Ellen, you might have a different take on that?
So I very much agree with you, and especially I know Tim's done a whole bunch of work on evergreen structures and what winding down these companies looks like. So maybe the subject of a future chat. But yeah, I think that has to happen for probably, yeah, a majority of these fossil fuel companies. I will say this though, actually, I found something to disagree with you about, Raj. This is good. I think that the European oil and gas majors aren't visibly opposing sensible climate change legislation, but actually they are still members of the Canadian Association of Petroleum Producers and the American Petroleum Institute and all these really awful trade associations that are actively lobbying to roll back methane emission standards and open up the Alaskan wildlife refuge and stuff like that. Just crazy stuff. So I would say that that's maybe a better marketing. BP still doesn't include their stake in Rosneft in their commitments, and they still do have these trade association memberships that are hugely problematic. So although they're a little further along, to be frank, you know, they're not meeting the standard either. But just to return to Raj's idea here, if every company had to come up with and show that they are following by having their spending line up with their you know, Paris alignment business plan, that's the basis on which you then go and vote against the re-election of boards of directors and remuneration policies and auditors. I mean, that's what you can do as a shareholder. I'm just basically answering your question, Tim, about what can we do. So that's what to insist upon for your fund managers, for your pension providers, for your universities. But the other thing is this focus on debt. Just keep coming back to that question. Is this policy across all asset classes? That's what you need to ask them to make sure that debt is covered. And then banks. It is all about banks, and you have power over them because they are consumer facing.
Ellen, I think our audience knows all about debt. Most of our artists and scientists are probably well in debt. So if we can use that as a piece of expertise on understanding global debt, I think that we are already a step ahead. Also, the word portfolio is probably not something that they utter quite with a lot of frequency, or picking stocks, frankly. And I can understand after hearing more of this why it's hard for non-finance people to get involved and make systemic change. So I would ask for our community to take some of these words of wisdom from these people who are on the front ends of the theory of this, and figure out ways that the art and science might be able to help turn the tides. I do think that there's got to be a conscience somewhere in some of this mayhem of big black box finance that maybe the art and science can help. So what can art and science do to help this problem?
So I think there's an ability of both artists and scientists to crack through what the financial sector generally operates on, which is a backward-looking quantitative view of the world. So for example, in Lochmaddy in Scotland, an artist made an installation showing the sea level rise in 20 years' time. It's had a very significant impact because it's visually stark and it's there all the time. I think many of us saw the picture of Rosa Parks sitting in a bus so that Ruby Bridges could walk, so that Kamala Harris could run. It's not a very elaborate piece of art, but it really gets across the idea that there is a systemic gender issue in US politics which hasn't yet been addressed. You know, many artists rejected sponsorship from certain families because of association with inappropriate drug use in the States. But some didn't. And this, the debate is useful in raising the impact of philanthrocapitalism, which is also, by the way, the same problem within the financial sector. if I'm being blunt, producing decorations for oligarchs or if we call them in the West, ultra high net worth individuals, this is not going to change the world. But challenging people, even just talking to them about what they're doing in their space. I was listening to the head of risk, global head of risk of Goldman Sachs, who's now very active on the climate change issue, a guy called Bob Litterman. And he was saying that he first started to get involved in climate change because a mate of his from university who headed an NGO just kind of asked him an open question of, Bob, what are you thinking about climate change? And you don't need to be a specialist in finance to have that question. You may have scientists included, you may have personal relationships with people who matter, and they may be able to talk to you because they know you're not going to double guess them on finance. So please, Catherine Hayhoe is a scientist, and she says the most important thing that we can be doing at this moment in time is talking about climate change. Well, artists and scientists do different kind of talking, and please talk about it.
Ellen, do you have any words of wisdom for our artists and scientists?
I suppose I do hope that you all walk away thinking I am a universal owner and I'm responsible for what my money does, like what its real impact on the world does, both directly, but also with this kind of social discourse thought in your minds. Because, I mean, one of the things that I looked into for writing this divestment report for the University of Cambridge was how these social movements have managed to change social discourse and how we talk about these issues. So prior to the advent of the divestment movement, people didn't know about stranded assets or financial risk associated with climate change and all of those ideas that, I mean, they don't go far enough, but those just were not part of the discussion a few years ago. And this one movement managed to change how finance folks talk about their portfolios. I mean, that is a wild thought. And that's something that you can contribute to. So I think, don't forget that role that you play, this kind of responsibility as both artists and scientists to change the way we think about things and to bring new ideas into the public realm, like just the idea of being universal owner as opposed to a selfish stock picker. And then the other thing is just remember not to get fooled by reporting, disclosure, or policies. Look for actual outcomes instead, and expect that that your institutions deal with the debt side of the equation and target banks. That's
Ellen, can I ask, do you think debt's an issue that we should be focusing on?
I think that probably wraps it up. Tim, what do you think?
I thought as I was listening to this, was reminding myself of something I was reading about how we need a new vocabulary. And this was not related to finance and climate change, but I think it is relevant to what you guys are trying to do. Is we do need new vocabularies. We need new ways of talking about these problems that are brand new problems for humanity. And we can't keep talking about them in the language we developed in the 19th century to talk about expanding westwardly into an infinitely receding, abundant nature where there was no partnership. It was just a bank that we could draw from and never had to repay. And I think art and science have tremendous contributions to make to helping us evolve that right new vocabulary. Art, particularly visual art, because we need to look at things and talk about things that we're looking at. And all of the stuff that we're talking about, intergenerational responsibility, corporate capture of government policy making, transition plans to some new economy that we really don't know what the new economy is going to look like yet. So there's a tremendous amount of work I think we need to engage with art thinkers and science thinkers, at a minimum, helping us evolve this new vocabulary and popularizing it.
I want to say thank you to the panel, and we're going to wrap up, but I wanted to say to our audience, please start your questions, and maybe start with what this new economy could look like, or what new finance could look like. And maybe we can spend the balance of our hour exploring some of those things with our art science thinkers who are in attendance. So thanks, everybody.
Thank you.
Thanks.
Thank you.
So hello, everyone. Welcome to the live portion of our panel. I wanted just to toss this to Tim, who's the actual moderator, to maybe give us some of his thoughts, having watched that panel, and some of the comments in the chat box.
Sure, thank you, Ian. I'll pick up on where Ellen was sort of closing out her marks, and maybe we can go back to this in this concept of universal ownership, as we're all universal owners, and the need for people to understand what words like that, what that means, and how art can really help create that new awareness. And maybe, Ellen, you could spend a few minutes just helping us remember what a universal ownership means to you, and when you were
Sure.
talking. Yeah.
Sure. Basically, it's this idea that, and it usually applies to large institutions like pension funds or sovereign wealth funds, or university endowments or something like that. Usually applies to the way in which they basically kind of own a bit of everything. And then if you imagine that you own a bit of everything, then these so-called externalities or costs that some companies add to the system, I mean, you will end up paying for those costs elsewhere in your portfolio if you own everything. So you kind of have to care about all of the negative costs that the companies that you own add to the whole system, be those, inequality or climate change costs. And there are a lot of others, antimicrobial resistance. I mean, there's a long list of systemic risks. It gets quite scary. But basically, it's this idea that you have to actually contribute to decreasing or eliminating these systemic risks in the real world. You can't just kind of try to avoid them by stock picking carefully. And I do think this idea applies really broadly because, anybody under the age of 60 is, pretty certain to have to experience some of the worst effects of climate change unless we do something about it. There are a lot of people in the world already dealing with serious effects of climate change, of course. But you've also got, this rise of so-called passive investing. I mean, we really are all universal owners, especially in wealthy countries, if you think about it in that way. And that means that we have this responsibility to ensure that our money is not contributing to the harms, but might actually be contributing to, mitigating a lot of these risks.
Yeah, and I'd like to sort of take an opportunity during the recorded sessions. We really talked about what we can do with the system as it exists. But when we think about ourselves as universal owners, this is all sort of our money collectively. And then we talk about who's in finance, and we talk about index funds, and we talk about institutions, we talk about banks and the public markets and large corporations. One of the things we aren't talking about as clearly as we should are the pensions as endowments as social superfunds. These are organizations that, even if we individually are not members of a retirement system, that retirement system is a social structure that's there to benefit society. And all of us as society have an interest in what's going on there. And that's a leverage point that, Raj, you and I have gone back and forth in earlier days about the both and conversation. And, I've been kind of beating my drum that we need to open up the black box of finance and look inside to how it's made and ask ourselves if we couldn't do a better job. And I know that sometimes has been received as dismissing the chances of doing something inside the way things are now. But I'm curious to hear what people are thinking as we look back at the conversation, which really was focusing on what's going on today to try and change the decisions that are being made on our behalf in that platform. Do we have confidence that that is enough? Raj, would you speak to that?
Happily, Tim. The pension funds and the sovereign wealth funds and the social institutions that you mentioned have a very explicit intergenerational function, and they have a duty to their future members, the younger members, which is as great as their current members. And currently, that's not really being implemented. I love the idea of having something which brings that intergenerational focus into view. I think it was John Elkington who suggested an empty chair at boardroom tables to represent the future. I think something more active than that is needed now. I was just looking at Time magazine, and they've got a Kid of the Year award. She's 15. She's an amazing scientist already. Having someone like that, or a Greta, on the board, maybe even, since nepotism is back in fashion, and I say that tongue in cheek, maybe we should have the daughter or the son of the chief executive or president on the board as well, so that they can provide an intergenerational perspective for these very large financial institutions that have such impact. Because currently, these institutions work on a quarterly capitalism basis. 1 year is a long time frame. 2 or 3 years is excessive, really. So we really need to bring into the discourse the time frame issue.
Which brings us into short-termism and long-term issues, long-termism kind of concerns, and another reach out to the art and science community. I think art thinking and science thinking is long-term thinking, but we're stuck in this finance system, which is very short-term. And I would suggest that we think of ourselves as universal owners, and we open up this black box of finance, and we look and see who's inside, and we start to see these pensions and endowments, these sovereign wealth funds, which are social super funds. They're accountable to us. We start asking ourselves, what could they be doing? And I think once you learn to see that they exist, which is a challenge that we need the art community to help the world see that super funds exist, because my sense is, to a lot of people, they're invisible. And that's one thing we've got to talk about. And then when you look at what they do, how do they put money to work? Well, they negotiate. But who are they negotiating with? Right now, all they're doing is negotiating with speculators. They're negotiating with what I'll call the Wall Street trading system. They're hiring asset managers to manage assets for them. And through the recorded part of our speech, we talked a lot about that system of asset management and how we want to build a respect for the bank of nature into the asset management world. But maybe we could be asking ourselves, thinking on the creative edge here with our art and science thinker friends, who should our super funds really be negotiating with? Why aren't they negotiating with large companies directly instead of buying and selling stock? Why aren't they sitting down with BP and saying, okay, we're going to give you the money you need to execute this transition plan? We're big enough collectively to do that. And I think the answer is to that I would put out there is that's exactly what we should be requiring them to do. The problem is, and we should be doing that as universal owners, is saying, look, we are society, and you are a social fund, and you need to account to us, because they do have a moral code of stewardship. They are responsible for generating cash flows forever for this generation and the next. They are responsible for both equally, which means forever. and they are accountable to common sense. And when we talk about universal ownership, that is common sense. It's like, what do we think they should be doing? And in order to answer that question, people generally need to have a better understanding of what it means for a super fund to negotiate an investment in BP directly, for example. So there's an enormous amount of work that needs to be done exploring these things. And these problems are so large, I sometimes think we need the art community to paint a new Guernica that talks about what finance looks like and how it's imploding our world. So that's not what we talked about so far. It's not ESG. That's really radically remembering the social purpose of our social super funds. And maybe Raj and Ellen, you could speak a little bit about how you feel the world is responding to an idea like that, or would respond.
Shall I jump in, Ellen?
Please.
In the previous session, which is fascinating, Ian, one of the topics was about looking at the future and working back from that, backcasting, or using scenarios, I think, to come back. And I thought that's something the investment finance world could usefully do, not in terms of the very technocratic approach that's currently used, which is kind of assessing portfolios for their climate sensitivity, but actually thinking about a future that's worth living in and coming back from that and saying, what role did we play in creating that future? I recently saw a video which was called Message from the Future, and it was produced by Naomi Klein's group Leap, which I think is fascinating. It's a plausible and worrying story about how we survived. I think the Ministry of, is it called the Ministry of the Future? It's another book of that type. I think an actress, Nicola Walker, did a little video for the FT. It's really interesting to watch. And I think if we looked at the challenges that we'll have to address in order to survive and thrive going forward decades, centuries, we would think about a different kind of investment approach rather than just replicating what we've been doing since the 30s, 40s, 50s. And one very specific thing, which I think will be close to your heart, Ian, Tim, is that a huge amount of money needs to go into infrastructure investment. All the basic utilities need to be made fit for purpose in a different world, and that money is needed now in order for it to be a safe world to be living in the next few decades.
Tim, can I just wade in here? I'm trying to synthesize some of the questions that are happening in the chat box, and with our hour sort of waning, I wanted to see if we could talk about it. I think some of the frustration that we're seeing for non-finance people is the artificiality of all of it, which is to say that you're only trading stocks with other buyers and sellers, and it doesn't really affect these corporations that are actually ruining the environment. Things like activists, shareholders, and these kinds of ideas where we can take a stand are proven. But I think what I'm hearing is that we need to, as artists and scientists, see where the real problem lies. And that is in this stewardship idea, this idea that we need to enforce some sort of sense of conscience around some of these finance plans, these portfolios, these companies, these bonds, these banks, to actually work not for shareholder value, which is a scary idea, but for planetary value. We need to change some of these metrics. And you mentioned also at the end of the recorded session that we need to change language. And I think this is something else that art and science can help to do, is to create a sense of that, so that we can put a priority on long-termism that we can get out of this short-term mold, that we're not worrying about lining our own pockets, but actually trying to line everyone's pockets. I mean, I know that's pie in the sky idea, but really, when you're looking at it from the outside in, it doesn't seem like finance is anywhere connected to what we need to do for the planet. And that's one of the reasons why I'm thrilled to have this on the program. But it is a very complex idea with a lot of entrenched systems that seem to be anti-planet. And I think that's maybe where we're seeing some of this frustration on the chat box. So sorry for the rant, but that's what I was trying to get to.
I hear you. I mean, would it be helpful for us to take a concrete example?
Yes, please.
Like Exxon, and say Exxon is responsible for like I wish I knew the number, some percentage of actual global emissions itself as a company, and is also actively sown doubt about the existence of climate change and whether it's human caused and so on and so forth. So what do we need to do about Exxon? They don't give a blank, you know, we need a power analysis that incorporates art and science if we're going to shift Exxon, which just needs to happen. We can't get there without shifting the Exxon. So many of us are lucky enough to have pensions. You know, again, everyone should have one, so that's another kind of justice issue. But if you have a pension, you are part of this group of universal owners that control the very largest fund managers in the entire industry. Like BlackRock is the largest in the world. They would collapse if they didn't have institutional clients like pension funds and sovereign wealth funds and so on and so forth, right? We can collectively make them vote against the election of board members of Exxon, so that they cannot function as they are without aligning with the Paris Agreement. We can get them to, halt active lobbying against sensible climate legislation, and we can refuse to buy their bonds unless they are aligned. So if Exxon's in a situation in which they can't lobby for what they want, their board can't get reelected, and they can't get new money through bonds or bank lending, because we've kind of gotten to every element here. And critically for the artists on this call, they don't have societal legitimacy that they gain through sponsorship deals with museums and other cultural institutions. These are people who come from a rarefied world. They are very wealthy often. It matters what people think. It matters to all of us what people think. But they gain legitimacy by taking part in these kind of elite cultural institutions. You all can help shift that. I studied a whole bunch of social movements and the role of capital, like apartheid in South Africa, climate change, and so on and so forth. And sometimes the museums will step away from these sponsors like BP or whatever first. Other times it's the other way around, like with the Sacklers, the harms were very clear for a long time before people started pushing back and saying, no, we're not going to decorate our cultural institutions with your name after you've killed people. It has to be like that. You need to reject this as purveyors of respect, of cultural value. And this extends to the advertising industry. Art is used to convince people of things every day, and it confers legitimacy in ways that are powerful, that only you can do. Scientists have a different kind of legitimacy that should be used too. People need to start walking out of their offices. People need to start signing on to the Extinction Rebellion letter that people working in the advertising industry signed on to, saying we're not working for these companies anymore. This is where we're at. This is a culture war. We don't have any time, and you have this unique ability. Sorry, I'm going on my rant now, Ian, but we have this one chance. It's this beautiful time in history in which we can actually do something, and future generations will be so grateful if we manage this incredible shift that has to do with mindset just as much as anything else. Renewables are cheaper than coal in all major markets now. That happened in the last year. So there's no excuse anymore. We can just get on with it. Please make that culturally happen.
Ian,
One of the things
oh, Raj, please.
Yeah, one of the things that one of the speakers from the last panel said was that art and science can blow a hole in something that was never real to begin with, in a way that the artificial constructs in society accept. And I was just thinking about the fact that before the pandemic, the USA and the UK were considered number 1 and number 2 in terms of preparedness for biosecurity and pandemic risk. And if you look at the very, very sad situation of our two countries, you see a reality which I think far-sighted artists and scientists could have seen much more clearly than the bean counters did. And so I think to kind of add to Ellen's point, blowing holes in common misconceptions, I think, is an important part of shifting the frame, the debate.
I just wanted to weigh in also, just to say that we're going to wrap this up. But Tim, did you have any summation based on some of the questions you've seen, or comments, or last comments before we sign off?
Yeah, Susan Todd has offered a comment on fiduciary duty and how it's currently considered tying people's hands, which is very, very true, and whether universal ownership can be a way of rethinking that. And I want to just say, yes, absolutely, 2 thumbs up. We need to engage in a new conversation about what it means to be universal owners and really begin to pull on those threads and unravel the system to see how it can be rebuilt.
And Ellen, do you have any last questions that go unanswered that we should be leaving with?
I suppose just this idea that you all are thinking more broadly about this than the finance industry is, for sure. And I think we need to zoom out with all of this. No individual can live a zero carbon life right now. It's not possible because of the system change that still hasn't happened. So we need to be looking at this at a systems level, and that means, looking at where the money and power is and challenging that culturally and financially. So I hope that this conception of ourselves as universal owners or as systemic thinkers is something that you can all join in on.
I want to say thank you very much to our esteemed panelists and the focus and effort to pull this off in terms of an art and science program. I think that's was a risk for us, and I think we did well. I really believe that what you guys are doing and what we want to do need to align, and this is a very preliminary conversation. I'm sure we'll have more of these as we try and figure out a way forward and try and help you remake finance. So I want to say thank you to everyone. Thank you to our attendees. We have another panel coming up in less than an hour with our artists talking about nature. So I would hope you enjoy that and join us for that. And adios. Thank you, everyone.